Hello, hello, hello. Happy Friday, everyone. TGIF. I'm really glad it's Friday. How is everyone doing? Hey, Patrick, happy Friday. Happy Friday. How you doing? Good morning, McRangers. Good morning, John. Good morning, Roe. Good morning, Sterling. I'm glad the week's over for you, too. Thank you for popping in to putting in some of the news, especially Mester speaking. Yay. Yay, Fed speaky. All right, yeah, we have the import and export prices coming in. Export prices dropping way more than forecast. Import prices also dropping way more than forecast. We have the consumer sentiment coming up. We'll get to the rest of the highs in a second. We got consumer sentiment coming up at 10 a.m. Eastern. Again, pay attention to the inflation expectations. Okay, so that's at 10. We could see, depending on how that is, a market shift. At that point, though, we've got Goolsby and Cook speaking, but Cook's not speaking till after the markets are closed. All right. We got Mester. You can read all of Sterling's putting all of Mester's comments in there, but I don't need to go around that constantly. Good morning, Eric. Oh, I'm trying to find this. What else? What else? I'm just looking through to see if there's anything else. See, home sales fell one of the lowest levels on record. May home sales fell. All right, and again, we're supposedly set a new record, which all right, I believe, although they back adjusted the 2022 prices, but whatever. This is like a rally in a stock going to the moon, but on very low volume. Okay, it's not sustainable. You don't have a lot of transactions because a lot of people can't afford it. Another one. I get live feeds from Redfin for areas I'm looking at just to monitor stuff. One that sold 9 months ago for 460 a square foot. No updates. They're asking 817 a square foot. No updates. Hoping just somebody is just dumb enough to, I guess, to buy it or wants their house enough to just, but there's so much stuff just sitting, and it's just fascinating. So this is like a stock or a futures rally on very low volume. It's not sustainable. Something has to shift. So either people have to start getting a lot more money, which generally means making a lot more money, or prices have to come back down. So I mean, stuff's been priced like it's interest rates from 3 years ago, like 3% or under. It's even priced even absurd at that point. But that's separate. We're not a real estate live stream yet. Yet. Good morning, Legion Reaver. I think it's going to tie in because people are really starting to at least put the brakes on a lot of stuff in their spending. Hello, Charles. Hey, Richard. Except for the uber wealthy, they're again. Remember the Fed talking Powell in the conference, and got asked a question. I need to paraphrase this unless somebody can find the direct remarks. Maybe Sterling can and post them. He got asked why if everything's we're still chugging along. The economy, GDP is good. Why are people feeling down on the economy? And I'm paraphrasing even the question. And Powell essentially said, I don't know. I don't know why people. That's how out of touch they are with the average person, the lower to middle class, even upper middle. They're starting to hurt. But the Fed's like, I don't know what's wrong. I don't know why people aren't super stoked about this economy. Look, the stock market's all-time highs. Well, and the people have equity in their homes. They only have that's only money if they can get it out of their home, which requires selling it or refining at a higher rate. But then they can be stuck. I think things are so out of touch, it's mind blowing. But things can continue to stay out of touch. And then we have to trade the patterns. That's why we trade the patterns. They talk about a lot of stuff, Charles. It's not a market book. It's about they tie in stuff with the markets. Just read it. You should learn from history too. Good morning, Anissa. Good morning, Heinrich. Her to discuss those mothers dressed to look like their daughters and daughters their mothers. Yeah, it's become LA. LA in the desert. I agree. It's actually I'm looking to buy more up in northern Cave Creek. Teardowns here start at 1.3 to 1.5. That's where I left on the North Shore. If you had a teardown, it was going for over. I saw teardowns going for 1.1, 1.2. Good morning, Royal Palms. So, hey, Christoph. All right. So we got those numbers coming up. Remember, 10 a.m. Eastern at the. Now, Adobe, they did a beat. Earnings weren't that impressive. They were decent, but they guided on the low end 100 million higher, and they're up 15.5%. This market's searching for anything at this point. Again, they can keep going. I'm not saying that. Tesla, you had the official announcement that they are, the board, the shareholders approved the move to Texas, and Elon gets his comp package back. So that's up a slight. That's not positive for the stock, though, people. Netflix up a bit, but chips, though, at least Nvidia and Broadcom are still running. The rest of the chips are all negative. Are we going to get some profit taking today? Every sector negative going into the open. Fed watch now getting solidly where the September cut is getting uh, rising above 60%. So it's getting more and more priced in, with two cuts getting firmly priced in this year. We are solidly in fear, and people might be wondering, well, why are we back in fear mode when the market keeps climbing? Because this is a really good capture. If you don't follow closely market internals, like yesterday, we had a lot of stocks making lows compared to very few stocks making highs. It's just the internals are abysmal, but you can see 52-week net highs versus lows on the NYSE could be breaking the bottom from May soon. So we're getting a major divergence here. Price is making new highs. You don't have the majority of stocks following the new highs. You have internals breaking down, and the breadth is breaking down. This is the volume summation index. We now have a triple bottom here. This is one of the easy ways to visualize it. Again, this was that last updated June 13th. So, but you can see here the triple bottom. So pay attention. They're saying something's not right because you're getting a very narrow rally. Now, the broad market, extreme greed. The put call ratio, extreme greed. Yeah, I'd even say this. I mean, they're at neutral mode, but this is the volatility is in the dumpster. So I'm just showing you that for a reason. And sugar PE 35.38 off the charts to the upside. In terms of today, there were no earnings. Next week, just a preview, very quiet. You got some home builders, Lennar and KB Homes, and you got CarMax at the end of the week, but not much. Accenture. It'll be interesting to actually see Winnebago's earnings next week to see where they are sitting. To see how they are doing at this point. Other than that, so next week's also very quiet in terms of earnings. There's today. We had Adobe already talked about restoration hardware testing, very, very key support. A miss on their earnings. So that's also breaking down. All right. We haven't even started talking about property tax. My tax just went up 2,500 year over year. It's going to be interesting. The place I sold, or we sold, my wife and I sold. I didn't sell it. It was actually the agent sold it. And I challenged, again, I legally challenged the property taxes for years and had them done. But when they reevaluate based off the sale price, the property tax will go up roughly about 80% for the new owners. And it's going to be close to 20 grand where I sold. Absurd. You don't. That's why you don't technically own a house, even if you've paid it off. If you miss a payment on the property taxes, they come. They can come take your stuff. You know, you don't actually own anything anymore. Oh, dark stream. I don't look at gold on a 15-minute. You complain that gold is tough to trade. Why are you so focused on trading gold on such a short time frame? I mean, you could do whatever you want, but that is tough. You're better to trade other instruments on a very short time frame. So, did I say good morning, Jacob and Christoph? If I did, what else do we have? Richard, EWZ Brazil ETF weekly head and shoulders. Let's see. S&P. What's this red on my screen? Now remember, to do technical damage, we can get a pullback, but major support's already back at 53.50. So major technical damage, we can have a pullback without doing major technical damage. That's why you still got to trade the trend. Now on the S&P weekly, we are back in overbought, but still have a massive divergence. Still running out of momentum with very few stocks driving this rally. Fewer and fewer stocks, which I showed in the breadth, driving the rally, leads to instability. But don't misunderstand me, because it can keep going longer than we think. That's why we need to trade setups. Now in the short term today, very key resistance at about 54.83, 54.84 area. All right. So that's where we're looking. If we do start breaking down, let's take a look at the shorter time frame. If we do start breaking down really below 54.70, I'm going to sit up and take notice, because we have the roll gap. Now this is a gap from the roll, from the contract roll. All right. Not from just a bunch of people trying to buy it higher when it reopened. That's a contract roll. But I will still watch, because gap fills still are important with that. So the area, if we start breaking down, I would watch is the high from the Wednesday time frame, which is 54.54, and then to the close. And this is going into next week, not necessarily for today. 54.27. The NASDAQ, again, back and overbought, but we still have a potential divergence. Look at this monthly. And this, again, on a monthly basis, could at some point drop a couple thousand points without even doing major technical damage. Just remember that. You got to put everything into perspective. Today on the NASDAQ, if the chart comes up, if we start dropping below 19.8, gonna sit up and take notice, but it's got to follow through then and start breaking down about 19,765. And then the target area for me, again, not necessarily today, but going into next week, is 19,610. In order for me to I can't get overly bullish on the NASDAQ today, because on any rally, 19,900 to 19,920 is key resistance. So if we broke out into the open, I'd be looking for a run up to 19,000, 19,920. The Dow is second weakest. We have a two top, not a double top, but a two top. The Dow breaking back below key support. So the Dow, if we start breaking down today on the open, would be the Dow and the Russell are the things I'm looking for to the downside, where it would have to be the NASDAQ if we break to the upside, and that would be on the NASDAQ rally to potentially 19.9, where key resistance. Now the Dow, we start breaking 38,780. I'll be watching back for a more key support area. We did have the little mini double. Coming up first, second, nearly third target hit, but could not get above the declining rotation zone. And that was an overnight double. So if it does rally, you have a final target of about 38,850. Hold on. 38,850 is the key target, but if we start breaking back down below about 38,770, I'm watching for a retest of that with the lows from the double. Russell, again, you had the CPI and JPOW move up, and it's already been short-lived. No close back above the 62.5. Running back down to test key support. If we flip this around now, we're at, with the lows now, why I'm paying attention to the lows here is because we're at triple bottom, pretty much exact bottom lows. See here? Look right here. That's when I will sit up and pay attention to lows. But also look at the closes. See, this is one thing I want to tell you. Where's the buying pressure? If you have to look at buying pressure in the Russell, which if buying pressure gets broken, that area, watch out. So you see between 2009.5 to 2005.8, that was buying pressure because every dip below it, look at this, is getting bought, and then you're closing up. But look at the same close, slightly higher close. But if this area breaks, watch out. Okay? This does not look like it's in double bottom territory either yet. The VIX, slightly elevated running up, but dropping back into the open. If I had to guess today, I'd be looking at a more choppy day unless that key support breaks, and then we could get some profit taking after a pretty decent run up this week. The DAX finished the double. DAXy finished the channeling double and then broke down. DAX is now in key support area. DAX is now key support. Also, remember on the DAX from the higher time frame, you have a massive potential double up here. Nowhere near triggering, but really pay attention to 17,900 on a closing basis. If you close below 17.9, I'd sit up and take notice because it could potentially make a quick trip to the lows from Friday, the 19th of April. The notes key support is now 110.11. Still trying to climb. There's something really, again, we don't trade even my thoughts. We trade setups where something's not right. And there was a setup. This is still chugging higher. And this would be one I'd be more aggressively raising a stop on. Yield dropping. Still this 4.095, 4.1 is going to be very key. First target area. This is an area I'd be actually more aggressively lowering a stop. What do we have going on? Dollar index, very interesting here. So it tried to break down. We got a divergence, lower low, higher low in the RSI, lower low in price action. Rocketed up, you had the reversal with the Fed and CPI, but then Thursday, reverse back higher, and look at the breakout move today. Watch today for the dollar index. If on a close above 105.11, that will shift the probabilities for a potential retest of the highs in April. And your overall bigger picture with the dollar index, if look at this, just take off. Let me show this. This is something I'm really watching too, because it's been in a huge consolidation patterns since January of 23. All right, not January 24, January of 23. Tried to break down in December on a closing basis, but then bounced back in the range. And look, if you look, but still tried to break down on a closing basis, but it still made a higher low. And now we're retesting. We already retested just slightly lower than the October highs, but this is starting to build again. Not saying it has to break out. I'm paying very close attention to this on a longer term. You can see that's the monthly chart. The weekly chart in the short term, why? Because this could be a significant shift if it does take out some of these key highs. But I'm really watching because we could retest these highs from last October, which is when we made the market bottom. That's why I'm paying very close attention to it also. There's a shift going back into the dollar and searching for longer yield. Searching for longer yield. That's why you got the 10 years dropping in yield, but the notes rallying, something searching for yield. Shifting in the dollar, searching for yield. Just pay attention to that. Crude. We had the breakdown, snap back into the range back from May. Something shifting here too. Now, again, going to be poised for a breakout, not today. Going to be poised for a potential breakout. The only thing I'll be watching is if we, a little sloppy in there with the double top, but if we break down, we could pull back to the 50% from this run up. Other than that, watching for the breakout. Gold, we do have on a daily only. So you need a daily close above 2358.8. Again, not trading advice, teaching the patterns, and this is valid on the daily only. The 4 hour is sort of a mess. So if you're trying to trade this on an intraday break, which is not looking like it will happen today, it would have to follow through with a daily close above 2358.8. So I'm saying these can be traded intraday basis, but if you don't get the follow through, it does not test out with the probabilities. That's why I stress the close. Silver, just nothing. There's nothing yet in silver. Nothing yet in silver. Although it's trading against a 50-day exponential moving average and the first target from the channeling double. But other than that, that's not a buy signal. There's no buy signal yet. Technically, if it rallied all the way and closed above Thursday's high, you'd get a minor buy signal, but not on a Friday, not today, not going into a bigger pattern verse. You have copper holding the key harmonic cluster area. A lot of support, forming a little mini double. That's the only thing. That is the only thing which would have to follow through because it's a triple bottom on the 4 hour. It's still valid on the daily. So what time frame? You cannot watch for a 4 hour close above this. It has to be followed through with a daily close. This may never trigger. It's just something to sit up and take notice of copper since it's got inflationary pressures. I'm still expecting a further breakdown and retesting this next major cluster. The only thing that would change my mind is a break above 4.6125 technically with a follow through close. All right, yen. Bank of Japan cutting back on bond purchases. The yen weakening all of a sudden off that announcement and then pulling back, but since that second 75 harmonic, still the key line in the sand is from the beginning of May. Still going to be watching for the yen weakening because of the 87.5 rule, but at least it hit that 75. Euro finished the double. Finished the double. You had to sit through the reversal of CPI, but that did not invalidate the double. You can see here, even with lowering the stop, would have needed a close above 108.42, did not get it, or a trade intraday through 108.67, neither of which happened. The double's finished. Now, what's interesting here is it looks like it's going to close below 62.5, so I'm expecting a retest of the lows for mid-April. You're seeing a pretty big shift. Spiders, we're at the open. Sorry for going long. Spiders, really pay attention to yesterday's low, 539.60 area, and then we still have the gap fill going into next week, which is a legitimate gap. But intermediate, I'd watch 537.68, then the gap fill to 536.95. To the upside, I'd pay attention to yesterday's close, 542.45. The Qs, yesterday's low is going to be key, which is nearly in line with Wednesday's close. Other than that, you already have right just slightly above where we're trading the gap fill, 476.72, but then I pay attention to yesterday's opening price, 472.72. The good old Bitcoin retesting. Now you got a triple bottom. You have a double top and a triple bottom. So I'm paying, we have a confirmed double top, but no close below the low of 66,259. Nvidia still, if you're looking at minor target 130, 183, but Nvidia getting very, very tired and still has a divergence set up here. Tesla at the shareholder meeting, still gap up and reversal back down, gap up today. Can't get any traction in this. That actually approval of his pay package is not bullish for the stock, by the way, anyways. What else do we have? Let's take a look at the S&P going into the open. We'll be watching to see if this 54.83 level holds. For the minor, resistance now is about 54.95 on a continued rally. If it does go up there, and you have a pretty negative tick. So I'm going to be watching to see how much this bounces on this mini rally before the next tick rollover and see if there's any major selling that comes in or if we make a higher low in the tick. All right. That's interesting. Just raised prices by 75K, 15% overnight. Well, I see a game here getting played by home builders, by the way. And again, you have local aspects to the housing market, but they'll cut prices, cut prices, cut prices. Like, let's say they're starting at 2 million, they'll drop it to 1,950, 1,9, 1,850, 1,8. Then if it doesn't sell, they'll jack prices back up to 2 million and start the cut game over again. It's very interesting. I think stupid money is driving the market right now, and the algo's chasing. I mean, that's my overall opinion. Wonderful opening story on beginning of World War One. Hi, I'm glad some people are reading Ubiquity. It's a really good book. You'll learn something. I think it's going to change the way some of you view the markets too. Well, remember, it's not all the metals; it's mainly copper. Uh, well, I think energy is even more important. If energy breaks out, it's going to be even more important, which is fascinating because we also have a big slowdown. We have a big slowdown. So if energy is anticipating the slowdown, it should be selling off. And we're getting contradictory pressure. Now, we have not broken out yet. It's something I'm keeping an eye on, and we might not break out. But if that does break out to the upside, watch that. Let's see. That's where we said, oh, I want to look at EWZ for Richard. EWZ. Richard said, weekly head and shoulders. Let's see. Little sloppy. It doesn't reverse enough of a move yet. It's for my book. Last week it broke key support on a closing basis. This week it broke it on a low basis. That's this. Just watch for that return. You don't even need it to be a head and shoulders. Just watch for a couple things. So last week closed below 62.5. The first magnet price is 26.34 and key support's right below 25.68. And then this could overall break down and retest COVID lows in Brazil. If this major support, this 25, 26 area does not hold, that not good for Brazil from the ETF standpoint. All right. Hope everyone has an absolutely wonderful trading day. Again, it's Friday, especially on Friday afternoon. Don't do anything stupid. Have a wonderful, wonderful, relaxing, fun weekend. We're in summertime. Do something fun if you can. Spend time with your family if you have that available to you or with friends. And just enjoy the weekend. And I will see everyone next week. Bye for now.